Welcome to Money Matters. I'm Emily Johnson, Certified Financial Planner and Managing Director of Polaris Capital Advisors. I am joined today by the one and only David Kroll of Mortgage Network, and we are here filming on this Halloween Friday, thus the hat that I was told not to wear. And we're very excited to be bringing you all kinds of economic and financial news that has been going on that has an impact on your wallet. So one of the things we wanted to get going with, and we have a lot of topics to cover today because it has been a very exciting week. One of the things we wanted to cover today is sort of a 411 on the difference between the Dow and the S&P index. And the reason, I know that's exciting. I know it's very exciting. Before we get to interest rates, so the reason it's somewhat interesting for those of you that follow the market on your phone or perhaps switch back and forth between CNBC during the day and whatever other news channel, is that you've probably seen the Dow running quite a bit over the last week, and the S&P sort of is a little bit more stagnant. It's been positive as well, but not quite as positive. And the reason for that is because the two indexes, even though oftentimes they're sort of discussed as one and the same, they're very different in their construction. And the reason that the Dow has been doing better than the S&P is because the Dow is what's called an is what's called a market-weighted index. And so when you have one particular stock in the Dow that's doing very, very well, it will bring the rest of the Dow up, and the S&P is not constructed that way. So yesterday, for example, we saw a huge run up in the Dow, and the S&P was sort of middling. And the reason was because Visa, which is a huge market cap company, had about an 8% gain. So again, I realize it's not the most exciting thing in the world, but for those of you that do sort of track the financials on your phone, et cetera, and are looking at the two indexes, they really have, it's certainly not divergent. When one goes up, the other typically goes up. But they're going up for different reasons, and that's when you're looking at your portfolio, it's worth considering if you own, say, an index like an ETF or something like that, might consider what you're tracking, and maybe even track both, track the Dow and the S&P. So there's my excitement for the morning when we're looking at that on this Halloween Friday.
Be still my heart. Be still my heart.
Yes. I talked fast for a good reason.
She did a good job. The S&P versus the Dow. I mean, what then spins off of that is there an economic story underlying that movement? For example, the big move caused by Visa?
Visa, right.
Right. Does that in turn link to the fact that the third quarter growth of the United States was at 3.5%? Mm-hmm. Oh my goodness!
Well, and that was interesting because that was sort of an underlying headline. You know, there's 3.5% growth,
bizarre.
But it wasn't as important as Visa.
Exactly. We have very suspicious gravity in the stories and in the bylines and so forth. Emily and I have been pointing out for a number of weeks that stuff that should be really, really, really important is not and is unseen. We have now an election coming up in 6 days, 7 days,
Mm-hmm.
5 days, 4 days. 4
days next Tuesday, November the
4th. And it's not in the news at all. We have an economy that just grew at 3.5%. It's hardly in the news.
And for what it's worth, that's a positive, actually.
But it's really important that Visa had a bang.
Right, and it's really important that Tim Cook came out as openly gay for some reason. That was more important
a huge news
than the
story.
Election. And the fact that Starbucks is going to start delivering coffee to your door if you so choose to be in a special... That was more important than this election.
And the big growth sector in the food market and in the entire food industry is that you're going to be able to start shopping, doing your shopping door to door.
Right.
That really is gaining traction.
That's more important.
That's way more important than
these things are more
going
important
to war. It's more important than going to war. It's more important than the state of the economy as a whole. It's more important than the election.
And we're saying this tongue-in-cheek, obviously, because they're not obviously more important, but the point is they seem to be more important not just to the media outlets, but I guess the point is it does not seem that this election is moving the markets at all. The market seems to be moved by other factors. Interest rates seem to be moved by other factors, perhaps.
Other factors,
right.
Yeah.
And that the point of that is we do actually seem to have an underpinning of a positive economy. There are some counter indicators. There are always counter indicators when you look at things technically, but definitely I think that the point is there seems to be a general it seems to be a general time of growth, and that seems to be a positive whether we have a Republican-controlled Congress or not.
I'd like to throw in that economic growth and a booming stock market are attributes of Democratic administrations, not Republican administrations.
Are they also responsible for cheap gas?
Which is totally counterintuitive, I completely admit. It's ridiculous for what it amounts to. It's ridiculous for anybody to claim responsibility for the direction the markets move or for the price of gas. But that is not that's not a political football, although they love to make it a political football. At the moment, though, as we pointed out last week, the politicians are really not talking about that stuff. They don't feel comfortable talking about it. They don't believe it has traction with the American public.
Well, I could say that perhaps some of the the Democrats don't feel comfortable talking about it. But I saw a few strong conservatives that happened to be on the tube yesterday discussing a few of those issues. But maybe I was watching the wrong channel. I don't know.
Perhaps so. There has to be a reason why gasoline prices at a record low or a record low in the last few years. Why continued job growth, why continued growth in the economy are all not center stage in the actual election.
Right.
That's what I'm talking about. I'm not saying that the talking heads don't continue to bloviate about one thing or another.
Right, and I mean, I think it's not a surprise that most of the time in elections we dig into the negative, or politicians dig into the negative, not just in each other, but they dig into the problems that need to be solved. So certainly unemployment, we're seeing some ads about unemployment, but not many. Now, 4 years ago, all the ads were about that. They were also about fixing the financial system and the impacts of QE and whether or not we should have, all of that stuff. Now we actually have, even though perhaps we're not to the level that we would like to be from an employment standpoint and from an economic standpoint, still on the up and up, sort of rising tides here. So we're not seeing as many...
Slowly rising tides seems to be continuing.
Right, not a whole lot to discuss. And in fact, you don't even hear that much about Obamacare these days and
Absolutely
the
not.
healthcare system.
No.
I don't know whether that's because there seems to be an overwhelming feeling that it's a positive, which is... I don't know that that's the case, but it also doesn't seem to be a huge disaster either.
It's very strange. None of the substantive issues are center stage.
Right.
This is very strange. It's also a complete shock to me. I didn't see it coming that for example, Visa and other major credit card companies are doing very, very well. I certainly didn't see it coming. That means in turn that consumers are using short-term credit cards as opposed to cash. For almost 6 years, they have been reducing the use of consumer credit. Now suddenly they're using it again?
Well, I think that it cuts both ways, and it's similar, I suppose, to the mortgage market, which we could get into. We could segue into that, but it cuts both ways because one of the reasons that Visa and the other credit card companies are doing well is because they have substantially reduced their credit availability, and they have also, in terms of the balance that they're allowing people to carry, the credit rates the credit rates that people have to have in order to qualify for credit, et cetera. So they've also sort of cleaned up their balance sheet, if you will, because certainly 5-6 years ago the concern was that credit cards were going to be the next shoe to drop after mortgages.
There was that scare. However, within the consumer credit world, there is a way of indexing shaky credit, if you like.
Sure, risk return.
We can, exactly. I mean, you can go all the way up to 27% interest based upon the person's credit and ladder back down. So that's sort of a manageable thing. What's shocking is that people are actually using it because they weren't. And
I'd actually like to get into that a little bit more and sort of what you're seeing on people's balance sheets as they're presenting them to you. So stick with us for one more segment of Money Matters. We'll be right back in just a minute.